Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Rich Longo. Rich has had a lot of time in fintech and banking tech. He's spent time working with Mambu, Robinhood, spent some time at our partner NXTsoft. And we really delved into a lot of different areas in this conversation. He starts off by telling you about some advice that his daughter was getting through TikTok on financial services and how that kind of points the way to how younger consumers are getting their financial knowledge in new and different ways. We talk a lot about how you can use those mechanisms, digital ways to engage with consumers, but also to try and serve them better, to try and find those consumers who maybe have different kinds of incomes and what it takes to really effectively reach and then serve with the right products for those customers. We delve into how a kind of integration of commerce and finance into other digital experiences, think buying on Facebook or Instagram, is shifting not only consumer behavior, but financing and lending behavior and opportunities, and how FIs can take advantage of that. And then finally, we touched quite a bit on cryptocurrency at the end and his thoughts around the state of both kind of true cryptocurrencies, stable coins, a kind of bridge, and then the possibility that central banks get into real kind of official central bank digital currencies and what that future might look like. So it's a really fascinating conversation, pretty wide ranging, and really thinking about kind of future trends and what's coming, and particularly the trends that younger consumers are driving towards what the future of banking might look like. So I hope you enjoyed this conversation with Rich Longo. Rich, thanks for joining me on the podcast today. I appreciate you making the time.
Appreciate it, Jeff.
You know, one of the themes that comes up in this podcast a lot is kind of starting with the needs of our users. And I think it's a really interesting conversation about how we take the consumer and put them at the center of our product design. But I also think there's this question of how consumers' approach to financial services are shifting, how the way they educate themselves, they learn about products and services is shifting. So I wanted to kind of ask you if you see interesting trends or what you see going on, because I think it's a space that you've got a lot of insight into based on your background. I'd love your thoughts on, how are consumers approaching the space differently, not just kind of interacting with, their traditional financial players in a different way.
Yeah, great question. I've learned a lot about, especially the emerging space from my kids, right? If you're
Best
fortunate to
teachers,
have,
aren't they?
yeah, that, some of the things they either text you or bring up, and sometimes you have to kind of fake it and go, yeah, sure. Case in point, my daughter. So, I've spent a bit of time on the brokerage side of technology and
Mm-hmm.
business. And so my daughter texts me one day and it's around, hey, Dad, I've learned how to access margin and use margin. And I'm going, huh? You couldn't even spell margin. And so she's like, seriously? And so I said, okay, send me a few words. And I thought she was like copying it from a site or something.
Yeah, yeah.
And then she proceeds to send a link on TikTok. And I'm embarrassed to say
TikTok.
this. Yeah, TikTok.
All right.
I'm embarrassed to say this. I did not have a TikTok account, so I had to download one to access this
You
video.
got to get on the TikTok just to understand what your kid's sending you. Okay.
Exactly. I was just getting used to Snapchat. So
That's hey, you're behind, man. You got to catch up.
heck yeah. So she sends me this video, and it's like a 6-part video. And yeah, I literally explains everything about margin. And it's talking in a way that's raw and honest, and then giving a perspective on different companies. And what was interesting about it after watching it, and the content and the presentation was definitely unique, right? It wasn't like using PowerPoint.
Yeah, yeah.
But what was interesting is I said, so what made you think like what they were saying was like super valid? Like you had
Yeah, yeah.
it's a trend that she said. It had, over, 1 million hits or something.
Yeah, yeah.
And like, so that tells you it's a valid source of truth. Well, he posts a lot of other things too, and I'm like, okay. Luckily it was accurate, but and then after that, she sends me another video after we had that discussion on options. Now, why this one was really interesting was because the person, it was clear that they were marketing a certain solution, but it was giving like super like valid information on comparison in terms of
Hmm.
option trading and looking at it and shorting a stock and so um, but at the same time, the guy was trying to upsell his solution, so I'm sure he was getting
Yeah,
paid.
yeah.
Point being is this is how they're getting their information, right? and I'm looking at the millions of users and the hundreds of thousands of comments and sharing and all that stuff from these sites that social media, that it's just like, okay, take a step back. The other part was, and I forgot to mention this on the margin side, but he referred to Reddit, and so did the options
Oh,
person.
interesting. So go from
And
TikTok to Reddit.
yeah, TikTok, Reddit. And so this kind of hones into something many of your listeners probably are aware of. But, for example, at Robinhood, you had this whole shift in AMC and Hertz stock, and it wasn't done by like any particular like Market Watch or CNBC saying, "Hey, invest in this," because quite honestly, a lot of these younger investors don't believe them. They feel like they're owned by corporations and that they're
Mhm.
lying, and so they're getting their information from Reddit. And so in that case, you saw this micro investor, a bunch of them, like hundreds of thousands of micro investors having the same buy power as an institutional investor,
Yeah, yeah.
and bringing stocks, high, and people that had different positions, institutional investors that had different positions, lost a lot of money. And so I
Is
think,
your daughter now trading options on the margin as a
she
side gig to pay for college?
she's making money, and so is, and then
Well,
our oldest son, she ended up telling him about it, and so he's obviously doing the same thing. So yeah, I'm happy to say they're making some money. Hopefully one day I can completely take them off the payroll. I'm looking forward to it.
on margin trading, it's a risky way to get
Absolutely.
them off the payroll.
Hey, a lot of things we do are risky, right? Especially a lot of
True.
your listeners that started up businesses and whatnot. And I think they're learning that, right? They don't want to take the safe approach. And so you're seeing a generation that's willing to take risks, but they don't want to do it in the traditional way. And they're learning from each other, which is super helpful. And in a lot of cases, like crypto
Mm.
and like AMC stock, they're all making money from each other because collectively they're driving the market demand.
They're driving market demand. Yeah, I mean the stocks, the meme stocks that have hit Reddit and had huge swings or support have been sometimes just because they want to screw the shorts who are out there, the institutional guys shorting a stock that they like the company or whatever. It's a fascinating space where they've actually aggregated enough market power to have real influence in the market despite being individually quite small investors. That's a
Or
fascinating
Elon
trend.
Musk and Doge to the moon, and
Well,
seeing Doge.
my son's younger than your children, but because he likes Elon Musk, he now, he has two stocks in his stock app. One is Upstart stock and the other is Dogecoin. And
There you go.
he's always asking me what drives Dogecoin price, and I never have a great answer for him. So it's true free market there. Um, do
Hey,
you have advice?
one thing that's really interesting there too, Jeff, that was a subset that didn't get addressed in the news or anything else, is because of this massive demand, Doge got more access to more exchanges. So there was
Mhm.
so much pressure from other exchanges like Webull and others that didn't have access to Doge to provide that access to their users. So I mean, the market's really driving in terms of preferential usage and
Yeah.
the access and product development.
So I was going to ask, when it comes to more traditional financial institutions, like how do they respond to this? Do you have advice or thoughts on if I'm a community bank, if I'm a regional bank? I mean, it's probably a brand in general that's about as far from a traditional TikTok personality as one could get. But in that world, how do you engage in that dialogue or at least, build some credibility for being cognizant of what's happening and how users are engaging? Like an institution like that respond to the trends you're talking about?
Well, I think it's offering different products and services that might not be in their portfolio today.
Mm,
For example, getting into the buy now pay later area, offering, if they have an insurance division, really focusing on insurance products for renters and people that aren't necessarily buying homes or have no interest in buying homes. um, you know, um, Folks that, are people that are in gig businesses.
hmm
So, they're looking at, doing some work with Amazon, or, they're doing DoorDash and Uber, and so they got to finance a car, right? And so, they're there's different requirements now, but you don't see community banks and credit unions really focusing around, okay, I want to go after my market and people that drive Uber full time, right? And then Uber and DoorDash, right? So their car is the primary. They need insurance for it.
Mm-hmm.
You might need to float some capital at some times on downtimes. So they might have spikes in the business. So everything that you've seen in more traditional businesses, you don't see creativity from lenders to figure out, okay, this is how the generation now wants to kind of work, have more flexibility in their schedule, pop in their car, or
Yep.
do other gig jobs.
And that's, I think, part of that has been what's driven some of the neobank growth has been the willingness to engage in the, providing the kinds of products or services or access to paychecks early, for instance, that have been attractive to those younger users who are maybe not well served by the current market. I'm curious if you see. I know you've been involved with Robinhood and have watched a lot of the trends in the neobanks. How some of them have taken advantage of these trends to really offer services and capture mind share among that younger consumer.
Yeah, I mean, I recently looked at a stat around the growth of Chime, and
Pretty crazy.
Chime is just crazy growth, right? So if you think about Dermot and the Cap, they not have one sponsor bank. They did not only have two, but I think they're on their third sponsor bank now, and so collectively, not just going to another sponsor bank, they need multiple sponsor banks. And so Chime, the last stat I saw was the fourth largest provider of checking accounts, and I'm careful not to say institution because they aren't an institution. In fact, they had to take bank off the word Chime.
Yep.
Um, but it's amazing that collectively they're larger than all the credit union checking accounts combined in the nation.
That's by
Um,
count, right? Not by, I'm assuming not by assets, but because I
by
think they're
count,
smaller by
yes,
number of accounts.
by
They're serving a
by
huge
count.
number of Americans.
But you brought up a good point. Like their growth was an area that people didn't focus on, which was providing earlier access to people's paychecks.
Hmm.
And what existed for years, like probably Jeff, when you got in this business, when I got into this business many years ago, is that you had ACH warehousing, and so typically you knew two,
Hmm.
3 days before what someone was going to get paid. And so Chime said, "Hey, we can kind of use this tool to do some underwriting." In a way, they don't consider it like a loan. They say, "Hey, we know how much you're getting paid, and we're just going to provide early access to it."
Yeah, yeah.
And so that is a CAC, right? There's a CAC, customer acquisition cost, and they see a ton of value, and they're monetizing in many other different ways. But that led to a lot of stickiness, especially in the COVID days when cash was really tight. If you're depending on public assistance or some other things, and I'm sure that drove a lot of growth
Hmm.
for people as they tightened their budgets and really needed that cash as early as possible.
Yeah, I wanted to shift and talk about some trends you and I discussed around the more lending side of what consumers are doing, and it seems like I don't know. You can't if you follow the fintech space, you can't go anywhere without hearing about BNPL. But this question of the kind of consumer shift, and I think it's often driven by some of these same consumers, the younger consumers who have grown up during the financial crisis, and kind of the trends driving towards different kinds of finance versus what I got a handful of credit cards in my wallet and felt pretty well served by the market, so maybe missed the boat a little bit on how big the space was going to be. But what do you see driving that, and where do you see that space going? Because this idea of consumers kind of engaging differently with financial decisions, younger consumers than older consumers have, is a really interesting kind of general trend that maybe BNPL is just an example of.
Yeah, I think you have to go look at the younger generation again. Let's say the 18 to 30-year-olds,
Mm-hmm.
and what evolved into their buying behaviors, right? Especially when it's connected to borrowing. Um, this generation, a lot of them were around when and saw their parents, whether they were in high school, elementary, or middle school, or whatever. But in like 2008, when the financial crisis hit,
Yep.
a lot of people lost homes, people lost jobs. It was very impactful. You had social media, so they were more keenly aware what was happening to their friends on a real time basis. And so I think it just had a very emotional, tight impact on them. And they said, basically, we don't want that to happen to us. So how do we prevent that, right?
Yep.
So you don't have a foreclosure if you rent. You don't have to worry about bankruptcy if you don't have, $50,000 on credit card bills and you're not paying your credit card bill and
Hmm.
overextending yourself. And so suddenly, it's more of micro handling of debt. And then you think about the way they're buying, right? So obviously Meta, which was Facebook and other
Yep.
social media platforms, said, hey, we want to make more money and ads aren't going to do it alone. So let's connect it right into e-commerce platforms. So they opened up APIs. And so now a lot of these consumers are on their feeds, Snapchat, Instagram,
Hmm.
whatever, and they're clicking within the app. They're seeing an outfit, they're clicking it, and they're buying it, and they're financing it. So maybe they'll say, okay, I have $100 in my bank account. The dress costs $50, and I only want to take $10 out of my account. So
Hmm.
I'll pay with $10 and I'll finance $40 and I'll pay it over 3 months. And I know exactly what my payment is. There is
Yeah.
no late payment, there is no interest. It's a flat fee. And
Yep.
I'm done. There's none of this gotchas, whether it's gotchas with NSFs, whether it's gotchas with these late fees. There's no gotchas. And so, again, that goes back to this whole behavior that they saw with their parents. They learned a lot, plus in
Yep.
combination of how they buy, right? They took the friction out of it, made it simple. You create profiles that on the social media channels they have. So if you
Hmm.
think about it today, if I'm going, it's say Apple Pay, and I click Apple Pay, and bam, it enters in all the information. One button verifies my face, and transaction's done.
Yeah.
And so that's what I think a lot of, and where these companies are hurting, whether it's credit cards or if people traditionally did overdraft type of loans and said, okay, I can pay for it, I'll overdraft the account, but I have $2,000, credit line or whatever. They're not
Yeah.
doing that anymore, and that's
Yeah.
predominantly the reasons that we're.
I think of it as I think it's a really good summary, and I think of it as kind of an increased intentionality around when I'm borrowing. I feel like so many people had the credit card, and it was like, it was kind of sort of a debit, which a lot of these folks do just use debit and they don't use credit for things for which they can afford. And then it was kind of sort of credit. And it was never totally clear to the consumer when it was A and when it was B,
Mhm.
right? And it was never clear if it was going to be credit, what the terms of the credit were really going to end up being in the end. And I think that clarity up front of, am I borrowing or not to pay for my dress? And if I'm borrowing to pay for my dress, what's it going to cost me and how long is it going to take me to pay it back? They want clarity around that. They want to understand it at the time of transaction. And so part of me wondered, like, why didn't Apple Pay just put credit cards in, make everything simple? Like the frictionless can be there with the old mechanisms, but I don't think most of them brought that clarity around the terms and the decision to borrow versus not. And I think that the new consumers want that clarity. They want that specificity around these are the terms, and in the ability to bring the merchant incentives to have basically zero cost financing is really compelling as well, right at the point of sale where you go, yeah, that merchant's willing to pay a little bit more. You can pay it over 4 months and no cost, right? Not just like there's no late fee. There's no fee at all if you pay these things off in a couple of months, and that's a pretty compelling, I think, value proposition.
And you've even seen it with the traditional players going from interest to fees. So Chase was one of the first out there and saying, "Hey, you can do this." Amex, on Amex all the time, I sign in and it's like, pay it button on individual transactions,
Yep.
and I can convert it. And that was a charge card, right? So they're trying to figure out creative ways, but they're also seeing a lot more value. It's interesting too on the lending side, especially when we're talking about credit cards. There's this massive benefit increase,
Mm-hmm.
and I'm at cost between Chase Sapphire and Amex right now, and they're going after this again, the more emerging wealth generation,
Mm-hmm.
where eventually this generation, they're younger, but there's going to be a transference of wealth, and they want to be well positioned, right?
Yeah.
Um, and so the benefits, I mean, the winners there are the Chase Sapphire and the Amex users, right? They're increasing the fees slightly, but not a lot. But the value you're getting I think one stat was on Amex, you had about $2,700 in potential rewards that you could get on a $595 fee. Now it's almost $4,000, right?
Yeah,
Um,
it's crazy. I mean, I've got that Amex, and it's just like we'll pay for your New York Times, we'll pay for your Hulu. Just put it on our card. You don't have to do anything. It's just like if it gets charged on here, every month $20 a month for Uber, whatever it is. It's crazy. I mean, it's
and
like a
Walmart, like that was the
yep,
latest one, Amex, the $12.95. But
yep,
here's the thing, Amex is not paying all of it. It also gives Amex the ability to market on their platform and say, here's the data of our users. And, Amex is thinking, okay, we can't let Chase win this market segment. We still have to be dominant. And we can give more because we'll make more on the marketing of giving them free stuff. And then eventually,
oh
like
yeah,
all, Hulu or a Walmart will end their promotion after a year or two or whatever. And then you'll hopefully have some sticky users, right? So it's changing the paradigm of how business was done a little bit, in creating greater value for the customer.
yeah. Fascinating times. Now, I don't think we could properly delve into, uh, changing the paradigm for emerging wealth users and not talk about crypto and what's going on with, various cryptocurrencies. I think the banking institutions getting into the game. Um, what are your thoughts on what's coming there and how it's going to merge or live alongside? I feel like there's going to be a maturation into some sort of more traditional approaches or adoption of this and not just the kind of wild west version of what's out there in a lot of the blockchains today. What do you see coming on the crypto side that is what this generation is kind of moving towards?
So I kind of break out crypto into three levels, right? So you have your crypto, like what I'll say, you're trading crypto, right? Your exchanges, your
The day
the
traders, yeah.
Bitcoins of the world, your stable coin, and then more of central bank digital currency, right? And those layers. There was a lot of news out this week, around stablecoin.
Hmm.
In fact, American Banker published an article where there were 12, I think 12 institutions that are getting into a consortium, to provide an alternative to ACH and Wire through stablecoin because they're
Wow.
absolutely sick of the Fed taking years to implement RTP.
Yeah, yeah.
So, the real time payments thing is just getting super old and obviously not being addressed. So, you're having a consortium, not too foreign to, if you think about in the early 2000s when the Fed wanted to implement Check 21, right? And the banks were
Hmm.
saying, hey, we want to lower our costs because of what Fed's charging us per check, but they're taking too long to make it happen. So, you saw through the clearinghouse SVP Co, and you had the top 15 institutions in the nation get together as a consortium and said we're going to do it, and very easily it was done, bypassing the Fed because you had 70% of the volume of checks from these
Yeah.
15. And so I think, in the world of crypto, it's accepted. We knew it was accepted the day the IRS started saying we're going to start taxing this and this is a legitimate type of income.
Yeah,
And
yeah.
then you have organizations too now like Anchorage, where they got an agreement, for example, from the Department of Justice
Mm.
to seize crypto assets, right? So they're being more legitimized. And now you're seeing the consortiums coming around and saying, hey, we can leverage stablecoin to do real-time payments, and bypass ACH, right? And expensive wires. And then finally, you have this thing that's not really talked about a lot, but if you Google it, it's there. And about a year ago, called Project Hamilton through the Federal Reserve,
I'm
which
gonna go Google
is, yeah, Google it, and you'll see the Federal Reserve is working with MIT on the fundamentals of the base system of what would be a central bank digital currency.
it. Mm.
And, I've talked to a few people in government, and it's not if, it's when. And I know some bankers will be going, yeah, well, that the issue here is a national security issue, and this is how it's been commonly explained to me. And it's because China has already issued a digital yuan, is already doing cross-border payments with that digital yuan with 7 other countries, and their intent is to destabilize us in the world as the world's reserve currency. And so we simply cannot let that happen. And so it goes back to this point. And again, another great article in the American Banker this week talked about community banks. This is your chance. It's going to happen. Here are the three models the Fed's considering. So you can either be part of the conversation or not part of the conversation. And so I would encourage your listeners to kind of look at those articles, do some research on their own, but get more serious about it, because I think it has massive implications to
Yeah.
banking and the business models of banks.
And it feels to me like, not that it's a perfect analogy, but so many technology revolutions start with the toy-like use case that doesn't feel like it's ever going to be real, but is better in some way. In this case, faster, cheaper, right? If you compare it to payments rails today, in many cases, and then it becomes more mainstream as it gets adopted. So I love your three layers of kind of like the pure cryptocurrencies, the stable coins, which are kind of a bridge between a Bitcoin, Ethereum, Solana world and a USD world, and then eventually the 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 central bank currency, digital currency initiatives where we're actually going to see real digital currencies. But that feels like a nice layering of it. And the innovation, of course, the fastest stuff will always happen on the edges, but a lot of the real impact to consumers will come as it gets more to the core, right? And those things will get some soup. But when you're providing a better experience to the consumer, ultimately, it's going to be impossible to stand in the way of that, right? And you're right. Like it's when I first got into the space as a technologist, I went, it takes how long to send money? Like I can send lots of stuff real instantaneously, and I can't it's hard to send money. And like, that's kind of mind boggling to people. And it makes sense in certain cases, I understand. But like, I think when you can make that fast, just like, Chime made getting your paycheck fast, when you can make that faster, that's going to have real value to consumers. And that's ultimately going to be unstoppable. It's going to be a question of how it gets implemented, not if.
Couldn't agree with you more.
Well, Rich, I appreciate your time today. Was there anything else you wanted to delve into? And then I got three questions I ask everybody at the end of this, so I'll ask you those. But first, I always like to kind of say, is there anything you wanted to delve into, or you think we missed that was worth covering, or did I do my job well?
You did your job well.
I love it. I appreciate the positive. I gave you good answers both sides. So my final three questions are always these. Number one, what's the best piece of career advice you've ever gotten?
Follow the person that's failed the most. And
That's not a common piece of advice I've heard on this podcast. So give me a little
no,
bit more on that.
because they learned a lot as much as they failed, and that way you can avoid failing as much as they did. So
All
yeah,
right.
a lot of learnings from people's failures, but I also have learned the most successful entrepreneurs have failed a lot too. So
Yeah, if you're afraid of failure, you never do anything truly interesting and innovative. You got to be open to it,
the
and
point
you'll
is
experience it.
fast, right?
Yep. I always prefer to think of it as learning quickly. I always say try to tell my kids, like, it's not a failure if you learn something from it. The only failure is if you screw it up and you don't learn. But if you learn, then you got some value out of it either way. Second question: what's the best piece of advice you've gotten about the consumer banking or consumer lending industry?
It will be nothing like what we're looking at in the next 20 years.
It's a very prescient piece of advice given the conversation. And my last question: what's one bold prediction for what's coming down the pipe? We've talked about a lot of things that are kind of coming, but give me something specific here as a bold prediction you think is something I could bring you back in a year and hold your feet to the fire on whether you got it right or not, or a couple of years maybe.
I think you're going to see 2 to 3 of the major banks build their own consortium around internal payments, like real-time payments. So the 10 or 11
Interesting.
banks I talked about were all smaller, mid-sized institutions. I see a Bank of America, Citi, a U.S. bank stepping up to the plate and doing it and really legitimizing it.
and legitimizing it and just pulling out the big broad network and saying, hey, if we can get it here, we can make it better, and it's a
And
starting
then
point.
our RTP becomes the thing that isn't relevant anymore from the Fed, right? And
You're not waiting on
what starts leading to more questions about why do we have to wait for the Fed to change underlying technology, right? Why can't we have internal loops within our financial system across, you know,
it between
institutions?
institutions. Yeah. That's a pretty specific and bold prediction. So I think you met all the criteria. I like it. Well, Rich, thanks again for making the time today. This was a fascinating dive into a whole bunch of topics, but I really appreciate your insights.
Yeah, same here, Jeff. Thank you. It was great talking with you.